Everybody, here's a video to get us started for Thursday, August 1st, 2019. So we've had the Fed and we've had our market sell-off for a day. We've closed below the 20-day simple moving average and the 10-day simple moving average. We made a huge range on the day. We closed below our halfway back for the day, and our low for the day tested but held above the low that we made on the very first trading day of July at 29.52, with our low holding today at 29.58. This is the 5-minute chart. I watch this during the day. I don't really tweet about it that much lately because this is something that comes in a little bit more handy for me when times get volatile, like all through Q4. Anytime we were going through those sell-offs and those bounces in Q4, and then in Q1. Those continuation bounces that we had, this chart was really helpful, and I used to post it a lot, but I haven't so much lately because the daily chart has been more useful. And the daily chart still is useful, but now we can use some of the elements of the 5-minute chart to help guide us into the proper direction to be in for the day. So here is the 20 EMA line and the RSI. The RSI, when it goes into extremely oversold or overbought condition, gives you an idea of when you should be looking to exit your trade and you should be in. So here is the start of the day for today. Here was Wednesday, and we started off the day above the 20 EMA line and then below, and we just kept seesawing back and forth above and below it. But here, as we got towards 1 o'clock, here is the 1 o'clock candle here. You can see that we flushed down below this 20 EMA line, and for the rest of the day, we never regained it. Here was our final low for the day, our bounce, and we took a little look back above this 20 EMA line, and then we sold off again. So a 5-minute chart with a 20 EMA line on it can be very helpful to sort of, disseminate which direction you should be trading in, whether you should be buying dips, and if you've bought the dips, whether you should be getting, maybe getting out of them. And always look at your RSI to see if we are venturing into oversold or overbought territory, and or if we are just sitting in neutral or working our way from oversold back to neutral. As you can see here, that's where we saw things taper off again, and the sellers came back in. Now let's just move on to a daily chart. Here is our simplified daily chart. This little purple bar that I put on here, this is just a box that I put around today's candle, and then I moved it on down and placed it below where the bottom of today's candle. And you can see that if we just took today's range and doubled it down, it would take us right down to our 100-day simple moving average. Another thing we can always count on when these sell-offs get started is for all these gaps that we've left in our wake to be filled. And sure enough, we have plenty of them here. Sorry about getting distracted here because I started to draw an element there. Okay, anyway, we left all these gaps in our wake coming up this summer, and then here we love these small ones that we have left here at the end of the line, and I deleted those off, but we've got some really big, fat, juicy ones here just below us that have been in our wake since about the beginning of June. And so a doubling down of today's range would take us to the 100-day and into this one last big gap here that runs between June 17th and 18th. Okay, so that would be an idea for where we are going next. A simple doubling down of today's, or we would fill this gap in completely, and we would go on ahead and probably go after the 200-day simple moving average. Now that would be something that would happen over the course of the next couple of weeks. I'm not saying that this is going to happen over the next couple of days. All right, so hopefully that sort of like guides you and makes you feel a little bit, better about where we could be headed to the downside. As far as the upside is concerned, what must happen is if we come in tomorrow and we come in an inside position, inside as in inside today's range, if we open above 29.58 and trade up, the first thing we're going to look for is, a handle. We incorporate in our 80 handle rule as well. We know that we're holding above the low of the day and the low for July and the quarter at 29.52. That's holding above that 29.50 handle with a move towards 29.60. And if 29.60 can be taken out, we look to 29.80. And if 29.80 can be taken out, we look to 3,000. There's your use of the 80 handle rule here. Well, we also have it here as to where we close today on 29.80. So if we come in, trade above 29.80, we're working our way towards the 20-day simple moving average and through these other levels and notes that are listed here on the roadmap. If we cannot regain the 20-day simple moving average, you have to get out of your longs because this is where you need to flip short in between the 20 and the 10-day simple moving average if they cannot be regained. When we go back here to our simplified daily chart, look at this. Here's our break of the 20-day simple moving average today. Look back through the months here. We have not had a close below the 20-day simple moving average since back here on June 5th. This was 3 days into the bounce off of the June and the Q2 low. Okay, so this is a strong signal. It's not easily taken back. If this turns out to be a situation where we come in tomorrow and we take back this 20-day simple moving average, this had nothing to do with the Fed or anything Powell said today. This had to do with end of month positioning and people flushing this down to get those calls cheaper and cheaper up above. And we're going to go on and we're going to make a new all-time high if we get back above this 20-day simple moving average so quickly after losing it. Okay, but in terms of trading what you see here is the first break of it and the first close of below it since all the way back here at the beginning of June. Okay, so this is a serious breach of support. Okay, and if you have bought calls and carried them overnight and we come in tomorrow and can't retake these simple moving averages, you need to get out of those and look at puts. If you came in completely flat and you don't know what to do tomorrow and we come in and we start rallying, wait it out. You don't even have to get long until we rise back above the 20-day. And if we can't rise back above the 20-day, look at puts instead. I hope that little idea helps you out tomorrow and helps you make some money, and that this video in general helped you figure out where the hell we are at right now if you were lost in any way. If you have any questions, just send me a direct message. Otherwise, I'll see you in the morning, and good luck and good trading.